Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. Always a pleasure.
Rick, you feel that the market is being dragged up by Apple. Why does everything follow what happens with Apple?
No, first things first, Jim.
Yep.
I'm reading the newspaper like you and everybody else and thinking, boy, this world is about to go down the toilet. And we've got a recession going on. It's deepening in Europe. Even Germany has gone negative now on growth. And China is sinking fast. Estimates of their own 6% growth rate have been trimmed by at least half because, they lie about pretty much everything. And there are just so many things going on right now. Boeing, the major institutional holding of virtually every portfolio manager in America and elsewhere, is going up on a string of horrendous news. And the U.S. Housing has peaked, autos have peaked globally. You name it. There's so many reasons why we should want to be short this market. And I've been looking frantically for something to do, a good setup, maybe a way out of the money calendar put spread is how I like to play these things in the diamonds or SPY. And just as a kind of symbolic piece of it, we've got Wendy's trying to expand its breakfast menu to compete against every other fast food purveyor out there, keep their stores open for longer, and they're going to serve up a bacon breakfast sandwich, a chicken biscuit also, and they actually think that that these new items will help the chain's menu stand out. It reminds me of there's a painting by a Dutch artist named George Tucker, and it's I think it was shown in a magazine. It's My Petition for More Space, and there are 1 million people in cubicles all trying to get to see the whoever adjudicates this request for more space. So anyway, the news is so depressing that I'm thinking this has got to be a great time to get short the market ahead of some horrific collapse. But this morning I'm looking at, every Wednesday I have a session for people who are learning using my hidden pivot method. And we looked at a chart of Apple, and lo and behold, Apple currently, as we speak, trading for 222 is going to 242. So we've got, and I'm going to guarantee that it's absolutely going to get there. I know if the regulators are listening, they don't like 100% assurances, but I can assure you there's about a 105% chance that Apple's going to rally at least 9% here. So, of course, if that's happening, Apple being maybe the biggest company in the world by capitalization, it will, as you were saying initially, going to drag the market higher. So whatever you think about what's going on in the real world here and the whole U.S. possibly already being in a recession, you can put all that aside. You're wasting your money on puts. Things will continue to go higher with as long as Apple is headed to 242.
And again, my original question, why does everything follow Apple?
Well, mainly the trigger here, and I'm sort of working backwards really, just from the fact that Apple has got this big rally ahead of it. And keep in mind, even Apple's story is not exactly a barn burner. You know, they can't figure out how to improve. The iPhone sales are weakening everywhere, and you know, it's getting harder and harder for them to distinguish these new models in some way. I think that the latest $1,100 overpriced iPhone is which you can buy for half the price, same technology with a company like Huawei. But the way Apple is trying to distinguish itself with these new products to get people to replace their 2-year-old phones is through, I think, the optics on the latest iPhone give you a different kind of different capabilities with respect to depth of field and some other things. So the changes are so subtle, and here's Apple just trying to. There's certainly nothing revolutionary about their new products, and so Apple's big idea, and Steve Jobs would be rolling in his grave if he heard this one. Their big new idea is to offer streaming content at $4.99 a month, going up against some established players like Netflix. And Apple certainly has a distribution system, but it's getting too expensive even for Netflix to produce these quality things that are attracting subscribers. So the Apple story is a fake too, and so it leaves us with the question: well, why are all these stocks going to take off like bats out of hell? And of course, the answer is that we're finally going to get our trade deal.
It is a good hint that trade deal is around the corner. China has suddenly dropped nearly $2 billion worth of tariffs on U.S. goods, and they also didn't retaliate with more tariffs the last time Trump added more.
And I would say, whatever the reason, don't infer the best of them. You know, it's I'm not quite sure. I would say that they have retaliated, possibly in ways that didn't make the headlines, but there was no tit-for-tat dollar amount on the trades. But I would say let's add them up and see where we stand. Whatever the trade deal is, we know in advance that that's going to be a fraud, that there's no substantive agreement that can come out of it that will make any difference other than, let's say, in China's favor. And what that implies is that Trump is going to cave on Huawei. Huawei, which makes, officially it makes hardware, a lot of electronics components, and it buys bits and pieces of it from 15 U.S. suppliers. So we're currently in, there's been an embargo that no U.S. company can sell parts to Huawei, and that will seriously impact the company. So the crux of any trade deal is going to be Huawei, and essentially to get anywhere with that, Trump is simply going to have to cave and say, well, U.S. companies can continue to do business with them, but it won't negate the original reasons for why we didn't want to do business with them, because they have embedded chips in everything they sell that pretty much hoovers every bit of every bit of data that is collected by every computer that uses their motherboards or whatever other components. So it's definitely spyware. There have been some great stories online to document this chapter and verse. It's not just a suspicion. You know, we get accounts of embedded spy chips that the example used in this one very long story online was that if you took a very well sharpened pencil and just knocked off the very tip of it, that's how big the spy chip is that essentially collects all of the data in that computer and transmits it to Beijing.
Huawei challenged people, find our spy chip. We're not spying, but I recall that the spy devices in the control panels for Hercules aircraft made by the Chinese, it was actually the solder in between the chips that was doing the spying. So they're very clever at hiding these things.
Right, they're so clever that they can say, we're not doing it. I mean, just try to find it. And it is a fact that even if you're an engineer, you're one of the best on the planet at designing motherboards and some of these telecom bits and pieces, you can't find it even if you're looking for it. So yeah, they're pretty good at it, and there's no reason, being as good at it as they are, that they shouldn't use that capability. So any agreement that we make that frees up the U.S. to do business with Huawei, and whatever reservations we have certainly not imparted themselves to our other trading partners. You know, the Europeans, for one, are not constrained at all and no buyers in Asia have gone along with Trump's embargo. But all right, so we're going to get a trade deal, and it's going to be the catalyst that sends the market higher, with Apple going, as I said, to at least 242.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, today the president tweeted that he'd like to see interest rates go to 0 or lower. Does he have more influence than other presidents had on the Fed?
Well, he's got the Fed chairman, Powell, scared to death. I mean, guy, but no, ultimately it's market forces that are doing the job. And, Andy Kessler writes a great column for the Wall Street Journal, and it's saying something when you can write a column that says the Fed just doesn't get it. And Kessler made a really good point concerning how the market affects rates. Now, we've got all these underwater trillions and trillions of dollars worth of bonds that are priced underwater. In Europe, certainly, there are many bonds that, and the question is, well, why would you park your money in a place where it's guaranteed to lose money? And you can say, well, the economy's really going to slow down, and maybe a negative 1% rate is the best you can do. But the fact is, the point that Kessler makes is that there's really a dollar shortage out there in this huge repo market. And the way the repo market works is that you might be a sovereign buyer or a big corporate borrower, and in order to borrow money, you have something collateral that you sell to somebody else, but you sell it with the guarantee that when it comes time to get that collateral back, you pay them a little more than they paid you. So it works out effectively to be an interest rate swap. So the problem is the best collateral out there is Treasury paper, and with the Fed buying up Treasuries in easing mode, you don't have enough collateral out there, good collateral, to service these repo markets, so that it's at such high demand that borrowers are paying up to get their hands on Treasuries, and that's what's forced the interest rates down. So you can kiss Trump's idea goodbye. I mean, it's not, ultimately these markets are responding to market forces, and when so many bonds have gone negative, it's telling you there's something seriously wrong.
Is it institutions or is it individuals who are buying those negative interest rate bonds?
Well, you could say institutions, but the institutions are not human. They are all acting as proxies for individual investors. In that regard, even the giants like CalPERS, for instance, you might say, well, CalPERS is doing this or doing that. But if you're a teacher in California, let's say you own a little piece of whatever CalPERS owns.
Is this one of the reasons why there's been such a rush to gold recently? Because gold is going up in price even though you have to pay to store it?
I think gold, I've been pretty bullish on gold lately, but I basically emptied my position on Friday. I was in GTX. That was GDX, a gold mining company play. And I think gold's going to come in for a longer correction than even I expected a week or two ago. So, ultimately, I think that the forces of deflation, which are out there globally, are going to be a serious drag on gold. But then again, the deflation in itself will bring about some financial crises that will have a bullish effect on gold. But on balance, I'm not one of those gold at $5,000 an ounce kind of guys, let alone $50,000, as some of the more extreme swamis have been saying for years and years and years and years. But I do think that gold could work its way up toward $2,000. But again, I think that for the time being, until Apple gets up to 242, pulling the whole stock market with it, I wouldn't be an aggressive buyer of gold. I'm just going to kind of stay out of it and look for a better bottom.
We'll have more with Rick Ackerman right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, the Hong Kong Stock Exchange has made an unexpected $36 billion plus bid for the London Stock Exchange. Do they have more confidence in Brexit than anybody else?
Confidence in Brexit? No, I don't think anybody can have confidence in it. I mean, even Boris Johnson doesn't really know how it's going to turn out, and he's supposedly the one driving the equation. So I don't know. I would say it's just too much money chasing too few goods, and it makes as much sense for the Chinese to buy the London Stock Exchange as it did for a group of Chinese investors to buy, Monet paintings in Rockefeller Center and a piece of Pebble Beach. So I don't think I would infer anything in a way of confidence from this purchase.
Is what China is doing now similar to what Japan did back in the late 70s, early 80s? Just buy anything and everything?
No, I don't think so. I think that the Chinese are going to wind up being much more discerning buyers. In fact, you really have to watch the art auctions to know who the crazies are out there. But I think the Chinese have been more judicious in buying less frivolous assets.
Will China be able to populate all those ghost cities that they've built?
Well, Jim Rickards wrote interestingly on that topic. First of all, there are a lot more of these ghost cities than anybody knew. I mean, you read your book, and he's talking about he puts concentric circles all over China with hundreds of these cities, but he makes the point that the cities don't necessarily populate themselves automatically. You can take a city and say, well, we're going to have our think tank office here, and here we're going to do industrial planning and this and that. But you need to develop the feeder streams organically, which means that you need you need universities turning out lots of PhDs, where they all come from Caltech, of course, and Stanford and MIT. So there's a problem. In order to get these buildings and cities to function, you need organic life in them, and it kind of extends the concept that Jane Jacobs played with in the 1960s. She did a book called The Death and Life of Great American Cities, and it talked about how when you build these high-rises, these subsidized apartments and things, and you put a patch of green grass out between a few buildings and a couple of park benches, that nothing happens. It goes dead, and pretty soon you've got a Pruitt-Igoe and controlled demolition coming in to take the whole place down. And so her point was that in order for it to work, buildings that you just build, you need organic life, and in the case of cities, you need pedestrian traffic. You need people walking from one place to another as they go about their daily business. So I don't think there's there's no instance where central planning is even capable of rising to that standard, rising to that task. Like, what are all the interactions between people, and how can we build a city to plan it, allow for it? So because we can't get to that threshold, it means that there's going to be a huge amount of waste. Many cities that don't get used at all, many cities that get misused, and some that get poorly used.
Rick, anything else you wanted to add to today's show?
Well, I guess the most important piece of it really is this epiphany I had today looking at Apple's chart, that it's about to blast off, and it's doing so with a news backdrop that's so depressing that all I've been wanting to do is buy puts, but I'm glad I've talked myself out of it.
Rick, thank you so much for being on the show.
Always a pleasure, Jim. Thanks again for inviting me.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.